Well, good afternoon and welcome to this session. My name's Simon Cox. I'm the Emerging Markets Editor for The Economist magazine. Well, the relationship between globalization and finance is an intimate one, but not always a happy one. My guest today, though, Simon Cooper from Standard Chartered, is keen to defend globalization and to argue that financial institutions can make it better and more sustainable rather than making it riskier and less popular. Simon is CEO of Standard Chartered's corporate, commercial, and institutional banking division, also CEO of Europe and the Americas, but I believe joining us from Singapore, so an example of globalization himself. Simon, welcome. I was looking at your biography. I believe you first moved to Asia in 1996, just a year before the Asian financial crisis. That must have been quite a baptism of fire. Did it shake your faith in globalization? Do you think it shaped the region's attitude towards it?
The contrary, actually. I think I arrived at a really pivotal moment in the region's development. It's led to the strengthening of many of our clients' balance sheets, many of the economy's balance sheets since then. That's led, I think, to the growth that we've witnessed in the region and therefore globally since then.
And I think you also served for some time in Korea. Does Korea have a sort of distinctive approach to globalization, do you think, that perhaps the rest of us could learn from?
So I think when I look at our business, Korea is probably the most globalized in terms of markets from Asia that have plugged into the rest of the world, be that from manufacturing, where they now locate many of their manufacturing sites around the world, but also in terms of distribution. And when I was growing up, if somebody parked a Korean car on their driveway, it was not a good sign. Now, a Korean car is aspirational, and the brands that have come out of Korea, the investment that's gone into the quality and the serviceability and the consumer aspect of that, I think, has been actually to your point about globalization. I think that's been a real example that where in the past Asian markets were distributing cheap goods. That's changed now. Now there's a real drive for research and development and quality, and it's they're brands that are very much desired elsewhere.
So it's shown that sort of success and enthusiasm towards the globalization of manufacturing. But when you look at the globalization of finance, has it shown the same enthusiasm towards the globalization of finance, particularly the role of foreign financial institutions and the flow of capital across borders?
Yeah, I think it has. Go back to the example we've just been talking about. Those Asian markets were exporting machines to Western customers. That's led to growing middle class, consumer class, which has led, I think, to Asian markets, Eastern markets, developing markets being more integrated into the rest of the world. That's led to a new class, if you like, of tourists and consumers. As we see COVID see the world start to recover from COVID, we've seen that patterns of trade have also recovered. Emerging market exports are back at pre-COVID levels. It's taken them 2 quarters to get there. All of that, of course, is financed. So there's a real symbiotic relationship, I think, between supply chains and global finance. We are seeing, I think, the role of regional supply chains and trade corridors within the region growing in increasing prominence, where emerging market nations are also trading more and more with each other than ever before. And again, for as a global financial institution, that's something that we thrive on. We're here to finance international trade, and trade within our markets is something that we're very keen to support.
Yeah, I'm keen to turn to trade finance soon, but I also wanted to ask you about the environment and sustainability. During that sort of rapid period of development you described, the environment hasn't always been a top priority in Asia. Do you feel that that's changed over the last few years?
I think it's changed globally in the last few years. I think COVID has actually been an accelerant of people's focus on sustainability and the climate specifically. So, I think as I look at our business, we very much want to integrate sustainability, climate risk into everything that we're doing. So what does that mean? It means helping ensure that clients are transitioning to net zero as the path to net zero is followed, and that we are financing responsibly. It also means increasing our suite of sustainable products and really acting more and more as an intermediary between capital, financing requirements, and bringing investors and our own balance sheet to bear where it matters most. And that is definitely benefiting and driven by that focus on sustainable financing in our markets. We in Singapore the other week, we executed a green bankers guarantee, which was for a French utility that was looking to build, own, operate an underground district cooling system here in Singapore. So using that sustainability model of financing, getting a performance bond linked to one of the big Singapore government agencies here, I think is sort of illustrative, not just of the focus on sustainability in a market, but I think illustrative of the way sustainability is actually mirroring in many ways trade and flows of capital.
And do you feel that Asia is on a par with, let's say, Europe or the United States in its concern for incorporating sustainability into these practices?
I think if you look at some of the practices that again, let's take Singapore as a case in point, setting up as part of the government's focus in terms of the economic growth post-COVID, looking at how they can start to standardize and digitize data coming from trade, looking at how you can then use that to link into transparency, how that transparency then links into sustainability. Yeah, I do. I mean, we did if you go slightly further west, we did recently a sukuk for one of the big Middle Eastern airlines, which was linked to sustainability, where that airline in particular was looking to align its carbon reduction targets with its bond, using the proceeds to finance the next generation of aircraft, which are much more fuel efficient. So I think it's probably fair to say that Europe and the US started first on the journey, but I certainly see it being very much in the sights of businesses and governments in this part of the world, and that race to net zero is firmly underway.
Can I ask a little bit about standards, verification, and so on? If a client like the one you mentioned comes to you and says, we want to do a bond or a sukuk linked to some green priority or some sustainability objective, how are those objectives defined, and then how is progress against them measured and verified?
Yeah, so I think that point about transparency and disclosure is one of the key catalysts that is going to accelerate sustainable finance generally. I mean, we've if you look at what we've done. We last week launched a benchmarking tool. What does that tool do? It allows companies to see how sustainable, how resilient their supply chains are when compared to their peers. And we did that really based on a sample size of about just under 1,000 treasury and procurement centres globally. that allows clients then to start informing their own decisions as to how they rank, what areas they need to focus on, in the absence of globally consistent standards. And I think one of the things that we've been and others in the industry have been quite vocal about is really that element of disclosure, and the more we digitize, the more transparent parts of the trade cycle are, the easier it is to then start to verify that and ensure that the cycle is sustainable.
So that benchmarking would take place across your clients. So there'd be a sort of a way of judging how well you do compared with other Standard Chartered clients. Is that it?
Correct. And so historically, when you're looking at sustainability, the sourcing of goods is generally evidenced by certification from Better Cotton Initiative or the Round Table for Responsible Soy. One of the approved certification bodies that independently verifies this. That's really important. But what's more important, I think, is to take that to the next level and to start to get companies to think for themselves, not just are they compliant in terms of what they're posting, but how do they benchmark? How does their whole supply chain match against their peers? How do they? Let's take there's a major computer and software company. What they're looking to do, and we're working with, is to take actually blockchain and say, how do we use blockchain to improve our procurement program? So how can we then track our supply chain end to end? That gives you a number of opportunities. It gives you opportunity clearly to take the initial good and verify its progress throughout. Also, as you start to digitize the end-to-end supply chain, you start to be able to look at the risk in that supply chain. You can start to run scenario analysis, taking what becomes a rich and consistent data pool and making it usable. So using AI and tools such as that. So it ends up, if you like, taking away the paper element as a direct benefit from a sustainable perspective, but has a much greater delta in terms of the whole end-to-end supply chain.
And in your own sort of trade financing, would you offer sort of better terms to companies that were prepared to sort of judge themselves by some sustainability benchmarks?
I think the market as a whole is starting to price sustainability attractively. We've seen a number of clients. I was talking to a Middle Eastern bank just now, who very definitely. Actually, that wasn't a trade finance. It was a more general financing. But it's again illustrative that using sustainability as an issuing instrument, like as a financing instrument, is absolutely marrying that demand. There's a huge investor demand out there and a huge banking demand to support sustainable projects, sustainable financing. And as you link that with digitization, then I think we are starting to see. I don't think we've finished it yet, but we are starting to see the availability of cheaper funding for more sustainable trade and more sustainable financing generally. I think what you will see in time is actually the opposite. I think you will start to see more charges for carbon-intensive businesses and carbon-intensive financing. And I think you will see that act as some form of subsidy to start shifting capital at a greater pace from carbon heavy to carbon light and start that journey to net zero accelerating even more.
That's very interesting. I mean, it's interesting you mentioned digitization several times, and I guess digitization is something that companies are having to adopt anyway for all sorts of reasons. Something that's been accelerated indeed by the pandemic. So it's interesting that it's having this sort of side effect of making it easier to enforce sustainability concerns. Simon, thanks very much for your time, and thanks to the audience also for joining us. I hope you found it useful, and I hope you enjoy the rest of the afternoon.